So, hi all, this is Mrs. Pavitravanshi, Assistant Professor, Department of Management Studies, SNS College of Technology. So, here from the last series, last video, we have seen the brand approaches, like brand valuation approaches with respect to the first approach, that is the income approach. Okay, so where the cash flows attributes and the cash flows like working capital with respect to it, we have seen the income approach. So now we'll be seeing the next approach, like, so let us recall the brand valuation approaches. Brand valuation, which plays a vital role. So this is what the income approach, we have seen the definition and the framework, cash flows projections, the discount rate determinations. So here here it estimates the attributes of the cash flows in the brand, where it is analyzing the historical performance to forecast the future revenues. The third one is reflects the risks of the brand's cash flows derived from the weighted average cost of capital. So here in this video, we are going to see about the next approach, the pure market approach. Okay, so the market approach evaluates the brand value. So how was the market value? Actually, how is the market approach been evaluated? So this is how it has been evaluated. How? So the market approach evaluates brand value through the comparative analysis and the market multiples. Yes, so it has been done with the comparative analysis and the market multiples. So by analyzing the pricing from the comparable brands. So first one is like, how will it analyze? So it will be analyzing the pricing from comparable brands. We have some brands like Adidas or like Nike. So they compare with the market prices, like pricing. How is the pricing done with the Adidas and how is the pricing done with the Nike? So this is how a comparative analysis has been made. So companies can establish the benchmarks. So obviously when it has been comparable, obviously when we are comparing the brand price, we'll be approaching the companies like we can establish the brand benchmarks. So however, this approach has limitations such as data availability and the inability to account the unique brand attributes. So this also has some disadvantages with respect to the data availability and the inability to account the unique brand attributes. So the first one is comparative analysis. How are we going to compare the market brands? So valuing the brand based on the pricing of comparable brands. So we are actually valuing how we are actually valuing the brands. How are we going to value is like based on the pricing of comparable brands. So like Adidas has different types of pricing and the Nike brand has different types of branding, I mean pricing. So these we are going to compare it and bring it to to bring the established benchmarks. So second one is market multiples. So what is the idea of market multiples? So using the ratio like PE and PS to estimate the market value. So price earnings the share and the price safety share. So this is how the unit using ratios, like we are going to get some market multiples with respect to the brand valuation for the brand. Okay. So the limitations of brand approach. So variability in data and unique brand tariffs. So this may affect the valuation. So the next approach is the cost approach. So how is the cost concept overview? The cost approach values a brand based on the cost incurred to create and develop. So this is how a cost approach is value. So based on the costs incurred to create and develop it. Next is the historical cost concept. So companies must track and analyze the past expenditures related to the brand development. So how are the expenses done for the development of the brand? The third one is the consideration of economic obsolescence. So the approach accounts for the potential decline in the brand value over time due to market dynamics. So how is the how is the market value being declined over time due to the market dynamics? So this is how a cost approach is being done. So the concept overview has been seen, the historical cost analysis and the consideration of the economic obsolescence. So this is how the two approaches can be done for the brand valuation. The first one is the income approach, we have seen the previous video, and in this video we have seen about the both the market approach as well as the cost approach with respect to the brand valuation success. Yes, so thank you so much.